Hello, this is Saul Suarez with Immobilienn, your best investment company. And today I have a very special guest. With me today is no other than Jose Ramirez, tax accountant and master at saving taxes and beating the taxman. So, Jose?
How you doing? Jose Ramirez with Advanced Tax Advisors. Some of you already may know me. I'm the guy you go to save tons of money in taxes. So we're gonna do a quick video to talk about some strategies and some real estate, right?
Yes, so today is all about you and how you can save taxes. We want to give you a lot of information, a lot of data, a lot of content. So when that day comes, I know you don't want it to come, but eventually it will come the day that you're going to have to sit down with the accountant and tell them, how happy you are of all the investments, all the money that you made, and hope and pray that you don't get hit with a big one. So for that, we're here and we want to see what strategies we can come up with to help you save on taxes. And I'll let the Jose have the floor since he's the expert on it.
Well, the things you want to consider is, towards the end of the year, we're coming up to the close of the year. You want to plan before it's too late, before January 1st comes around. There's many strategies you can use. Everybody's situation is different. The key thing is planning. You want to review your entity structure. You want to see if you can shift some income. It's retirement accounts, cost segregation studies, as it relates to landlords and property owners. There's just a lot we can do. It's just a matter of reviewing your specific situation and seeing what makes sense for you.
So there's a lot of us that are in real estate, investing actively in real estate, whether it's through wholesaling, fix and flipping, rehabbing, buying and holding, maybe all of the above. So we're gonna try to bring you on each situation what would be, in our opinion, the best way for you to save on taxes for this year. So let's start with wholesaling. Wholesaling is probably one of our specialty. We do it often and it's very common in our organization. As a wholesaler, it is true we make huge amounts of money. Sometimes some months are amazing, some months are very slow, but overall it's very good.
Right.
So from a wholesaler perspective, what can we do, or what can the viewers do if they're wholesaling in order to save on taxes?
Yeah, I mean, a question that I get asked a lot is, what kind of entity should I have? I'm doing wholesaling versus holding property long-term as a landlord. When you're doing wholesaling, selling contracts or flipping property, you want to make sure that you're operating under an S corporation. You could have an LLC, but just make sure that your LLC is being taxed as an S corporation. That's what's going to put a cap on the self-employment, on the payroll taxes, and you're going to save 15.3% in taxes.
Mm-hmm. What if we're talking about a rehab? Somebody that buys a property with the intention of reselling it, he has to hold it for anywhere between 3 to 6 months, sometimes even longer than that, if it's depending on if it's a cold market, if it's a hot market. And they have to deal with expenses such as the rehab costs, contractors, electricity, water,
Right.
any permits that might need to do. Those deals take a little bit longer, and it's a completely different animal when it comes to real estate. What do you think would be the best way for them to save on their taxes?
Yeah, so when you're rehabbing property, you're in essence, you're engaged in an active trade or business. So you want to keep track of your expenses. You want to keep track of your basis in the deal. Let's say you bought a property for $200,000, and you're adding $50,000 in repairs. You're adding interest expense, carrying costs. That all gets added to your basis. So now your property is no longer a $200,000 property, it's a $250,000 property. So you're paying taxes on the difference between the $250,000 and the $300,000 that you would sell it, or $400,000 that you would sell it. So it's important to track your expenses. When you are flipping property as a trade, as a main business, the properties that you're buying are considered your assets. They're considered your assets until you sell the property. So keep that in mind as well for bookkeeping purposes, accounting purposes.
Now, you mentioned something very important, which is keep track of the expenses. And I have a confession to make. I suck at it.
Yeah.
I have no idea
Most people do.
what expenses we have in the business. I know that we're making money. Obviously, it shows that we're making money. And I know that we're making more money than we're spending. Now, for a lot of people that feel the same way, and they're very good at what they do, whether it's wholesaling, fix and flips, they're making huge amounts of money, but they don't keep track of all the little expenses that they have. Is there any solution that you can come up with? Anything that you recommend?
Yeah, I mean, QuickBooks is great. Use QuickBooks. That's what we use at my firm. A lot of our clients don't want to deal with the headaches of accounting, so they retain us to do their books. We have a staff accountant in my office that handles most of my clients' bookkeeping and accounting. That's an option if you are not the type of person that wants to get involved in accounting. I mean, most business owners don't.
So, in order to address that problem that I had, that I'm not very good at keeping track of all the expenses, one thing that I do in my particular business is I hire an accountant to come in a few hours every single month to keep track of all the expenses that we have and the profits that we have, and he gives me a report with all that information. And perhaps, Jose, I'm pretty sure that you offer the same services in your business.
Well, yeah, I won't go to your office, but yeah. We offer that service.
Well, if you're doing it through QuickBooks, it's all data driven.
We do it all online.
Yeah.
I mean, nowadays everything can be accessed online. Online banking, everything else.
Yeah.
So
I mean, typically 80% of our deals are bought and sold online. So I'm pretty sure if we can buy and sell real estate online, you can take care of the accounting online.
Sure. Yeah.
So what about the people that are buying rental properties? They're not wholesalers. They're not fix and flippers. They're buying 2, 3, 4, 5, 10 rental properties a year.
Yeah.
I'm assuming that they would be taxed differently, and also they would have to have a different system about it, right?
Believe it or not, landlords are in a better position tax-wise because they have the advantage of having assets that they can depreciate on the yearly basis. So not only that, but they can accelerate depreciation at any given year by doing a cost segregation study. So what a cost segregation study does is it segregates the components within a property. Let's just say that you purchase a property for $300,000, and normally you would depreciate that property over 27 and a half years minus the land. But with a cost segregation study, what it does is it segregates, for instance, the personal property, which is the appliances, kitchen cabinets, improvements, which are your driveways, your fences, and designate a different timeline, a different life for the asset. Instead of depreciating it over 27 and a half years, now you're depreciating over 5 years or 15 years and 27 and a half years. So you can accelerate that depreciation, which will eat up all your income, your rental income, and a lot of landlords don't pay any tax because of it. So it's a good strategy to have.
Excellent. Now let's talk about corporations, wholesalers, rehabbers, fix and flippers, landlords, and private money lenders. Do you recommend that they all have the same company, or depending on the task of their operation, they should switch over to one? Or what's your take on that?
Right, definitely. You want to separate your activities. So if you are a landlord and you're also doing flips, you want to have one entity as an escort for the flips, and then you want to have a separate entity, a partnership or an LLC that is holding the assets, that is holding the rental properties. You don't want to mix the two because it creates long-term issues down the line when you're trying to sell or when you're trying to pass it on to your heirs.
Now let's talk about on a good year when someone made a whole bunch of money, more money that they know what to do with it, and then December 31st is right around the corner.
Yeah.
And that's when they start getting nervous, and they're like, Jesus Christ, I made all this money.
Right.
I better find something to put into, because otherwise I'm gonna get hit with a big one.
Right.
A big tax. And believe me.
Yeah.
Okay, let's be honest. Nobody wants to pay taxes. Okay, let's just get it out of the way.
Yeah.
So what strategy, advanced strategies can they come up with, or can we? What options do they have in order to, instead of just paying that back to the government, which probably are not gonna do a very fine job at distributing those monies, and rather keeping them in their wealth in that family.
Right. Yeah. So everybody's situation is always going to be different. The amounts of incomes are going to be different. Your marital status, children, type of entity that you have. The key thing when you're a successful investor and you have a significant amount of money at the end of the year, the key thing is to plan. If you're coming to your tax advisor, accountant, CPA at the end of the year on the 31st, there's not much you can do. The key thing is to plan now. Today is what, the 18th, 19th, right? but you still got a little bit of time, not much, but you wanna act now. There are strategies you can implement. As I mentioned earlier, everybody's situation is different. There's income shifting, there's restructuring your entities, there's paying your kids, retirement accounts, cost segregation studies. There's just a ton of strategies we can implement, but everybody's situation is always going to be different. Every strategy is different for every person.
So basically, what you're saying is, depending on your situation, you have to convey that to the accountant, and the accountant has to find what strategy will work for best for you.
Right.
Right. Now, let's talk about the man of the hour, the accountant. Okay. If you're in real estate or any other business, but particularly real estate, and you did well that year, what you should look into for in your accountant? What are the qualities, or what is the criteria that someone that it's probably not very knowledgeable about taxes and accounting should look into an accountant, and what questions should they ask?
Right. Yeah, definitely when shopping, that's a great question. When shopping for an accountant, you want to make sure that they understand real estate, number one, because real estate is a different business than any other business because of the depreciation factor and the different components associated with it. You want to make sure that they understand real estate. You want to make sure that they can answer questions such as strategy questions. If they have any strategies for year-end tax planning, maybe ask them, can you provide me some information on what's the right entity for my business? Is there an analysis that you can do for me? And if the answer is yes, then probably they know what they're doing. If the answer is no, then they probably don't. So you want to, ask the right questions. What can I do? The year is coming to an end. What kind of strategies are you recommending? If they give you some answers to that, then he's probably the right guy.
In my experience, I have seen two type of accountants: the extremely conservative and the extremely liberal.
Yeah.
Right? I haven't found, at least yet, one that is right in the middle. So what I look for in an accountant, as a real estate investor, as a property owner, as a wholesaler, it's someone that I can, first of all, connect with. I want to make sure that they understand my goals. I believe that it's
That's
very important
Absolutely.
that they understand your goals, because 20 people can walk through the door, and if the accountant is giving the same piece of information, the same piece of advice to everyone, you might pay more taxes because that accountant wasn't he wasn't buying into your vision and exactly where you needed to go on your goals.
Right.
So find someone that you can connect with. Ideally, someone that is a real estate accountant. At least I would say 70 to 80% of their business has to be in real estate. Would you agree with me?
Yeah.
That's a pretty good starting point.
That's good.
And don't be afraid of asking questions. Hey, how many of your clients are real estate investors?
Yeah.
Do you work with real estate investors? Have you ever dealt with a person like me before? I own X amount of properties. You could own 10, 20, 50 properties.
Right.
Have you ever dealt with me before? Are you knowledgeable enough? Probably they will say yeah, but you have to find out if this is the right fit for you.
See, the thing is, to your point about the conservative accountants, I can tell you that most accountants are just trying to keep you in compliance so that you don't get in trouble with the IRS. They just want to make sure that they file the returns on time. They probably tell you not to be too aggressive, not to take too many deductions. That's the wrong kind of accountant to have. All right, so you wanna work with somebody that it's not going to be what's the word? Not reckless when he gives you suggestions, but at the same time, he has the IRS code that can substantiate these strategies that he's presenting to you. So that's what we do different. What we do different is that we strategize, we back it up by IRS code, and we defend it if we have to. We defend it in front of the IRS if we have to. You want to make sure that you're working with somebody that understands the code.
Yeah. And something also that I realize it works very well is you get an education in tax saving strategies as well. Don't leave it just to the accountant, because at the end of the day, no one is more interested in saving money than yourself.
That's right.
The accountant is going to help you. But one thing that I personally started doing it last year, is I started reading about how can I save money. Because a lot of times the accountant, depending on the accountant that you deal with, if you deal with Jose, you're not going to have that problem. But depending on the accountant that you deal with, they might not be up to date on all the tax saving strategies and discounts and reductions and write-offs that you, as a real estate investor, are entitled to. So at the end of the day, it is up to you to make sure that you can deduct every single dime that you can, as long as it's on the code. Would you agree with that?
That's correct. Yeah,
Yeah.
especially now with the changes to the tax code. The tax
It's
law that
always
just
changing.
changed last
I mean,
December.
Listen, you
So-
cannot run a business and also keep track of the tax codes at the same time. I
Right.
mean, it would drive you crazy.
Yeah.
You know, that's why you need a good accountant that is on your side at all times. And again, understand your goal, your vision, and where you're trying to get to. I think that's crucial in any operation.
Yeah, absolutely. Yeah.
You know.
So find a good tax advisor or accountant that's going to help you through these changes in the tax code, help you with your business, and save money this year.
Now, the end of the year is closing in. We're in the last 2 weeks. You did well. You made a lot of money. Okay, what are you gonna do with it? Are you gonna give it back to the government? Are you? Are you? No. The answer is no. What you need to do is you need to buy some piece of real property, American-made state. Okay. Jose, better than anybody would tell you. You know, I'm always pushing for real estate. I love real estate. It's in my veins. I mean, if I get a cut and you see blood, it's gonna be with bricks on it. You know, that's how much I love real estate, right? But Jose, tell them why real estate. They hear from me all the time.
Yeah.
I want you to hear from another perspective. Why should they invest in real estate? And why not? Maybe they shouldn't invest in real estate. But what do you think?
Yeah, I mean, there's a couple reasons. I mean, holding real estate long term, to me, that's key, because it helps you not pay less in taxes. A lot of times pay no taxes because of the depreciation. So that's number one. The depreciation eats up all your income. Number two, you can, when the date comes that you pass on to the next life, your heirs will inherit the property at a step up in basis. So let's just say that you bought a property for $100,000 today. 50 years from now, when you pass on, that property is worth $1 million. So your kids would get it at $1 million and not pay any tax on the difference between $100,000 and $1 million. So that's what we call a step up in basis. So that's a great benefit to owning real estate and leaving it to your children. So you got the tax benefit, double tax benefit when you buy it. You got the depreciation, and then you have the tax benefit with the step up.
And you start the state benefit, right? And if you get really creative and you know some strategies that you can utilize, like, I don't want to say anything, but maybe you throw in a revocable trust, advanced techniques that would basically make you pay 0 to no taxes at all, very little, if any. So there are some strategies out there that you can definitely research into that is going to very, very much be worthwhile your time taking a look into.
Absolutely. Yeah.
It is the end of the year. Okay, it's not that you want to buy properties. You need to buy properties, because if you don't invest in an income-producing rental property, you're gonna have to give the money back, to the government. Okay. So what would you rather do? Give the money that you work very hard to earn, or just keep accumulating wealth? And by the way, the tax code actually helps you invest in real estate and get more rentals, because the way that is written, it's only written so you can buy more. They basically give you two options. Either you pay us some money back, or you keep on buying rental properties.
Right. That is kind of true. So if you
it is what it is.
They want you to keep buying more, they don't want you to sell, because when you sell, that's when you pay taxes back, right? You pay the depreciation, recapture depreciation. So the strategy there is never sell. You can defer taxes by doing a 1031 exchange.
1031 exchange.
Or just not sell. I mean, if you need money, you get a mortgage on the property and keep buying real estate. By not selling is how you not create a taxable event.
There you have it, folks. Hopefully you learned a lot about tax saving strategies, what to ask your accountant, what corporation to use when you're doing your flex or your rehabs or your rentals. And if you have any tax related question, please reach out to Jose Ramirez. Who better person to serve you than the guy that you see down at Bria every single meeting? I mean, come on. He's already helping investors. Why wouldn't you let him help you? Okay.
Right.
And if you have any questions, or if you're ready to invest in some real money-making properties, please give us a call back. We'll be pleased. It will be an honor to be the company that provides you those amazing investment properties and gets you those returns that you're wife will love and desire.
There you
Okay.
go.
So if you have any questions, please reach out to Jose. Reach out to me. We're here to help you.
Excellent.
Thank you very much. Have a wonderful day. Much better, right?
Yeah,
Yeah.
good.
I like it.
Yeah.
I have a very, very special guest. With me today is Jose. Fuck, I forgot the last name. Ramirez. Okay.